Hello and welcome to Share Talk. Today I'm joined by Richard Lloyd, who's CEO at MINEXIA. How's today, Richard?
Good morning, Zach. How are you?
I'm doing fine. It's nice to see a new name, a new face in the markets. You may have chosen a pretty good time as well. Some people have said to me, fund managers said to me, this is the best time in the market since the dot-com boom and obviously bubble that we had then. Mining sector, tech sector, and pharma are the hot situations at the moment. I gather you're going to try and exploit at least some part of that.
Yeah, I guess out of adversity, we've had a sudden acceleration since the beginning of the year with NR Private Market, which is online. It's been described as sophisticated crowdfunding. So we're FCA regulated. And yeah, the COVID situation where everybody is doing online conferences, etc. And why not on the fundraising side as well? So primarily it was set up as with natural resources in mind. We're all geologists and mining engineers that also worked in investment banking and funds. And we set this up, the infancy, about 4 years ago, but really got cracking sort of April, May to 2019 and had this huge acceleration since. And we've now done as you know, with High 55, who you spoke to, I think, the other week, we've now developed a parallel platform in the fintech space. And then green tech, that could be our third parallel. So it's accelerating pretty quickly.
But I suppose the USP is that you're addressing a certain type of investor. Obviously, the whales go to certain places, and maybe there hasn't been a proper place for people who are not too big, not too small. You're somewhere in the middle. How would you categorize your audience or your market?
Yeah, we probably started off with mackerel and we're heading up towards pilot whales and something slightly larger. I think we identified a gap where the private, they have to be sophisticated and high net worth because we're FCA regulated, as I said, as an authorized representative. So, but perhaps you and I, if we're putting in 10, 15, 20,000 pounds into a deal, very often the brokers, it's a lot of work. Ours is all automated, so those investors certainly got left behind, I think, in the early stages of deals. We have a fully transparent platform there, so everyone is offered the prices at the same levels. There's no sort of manipulation of prices. There's no expectation management. It is what it is. We haven't yet had to cut anyone back, even if deals have been oversubscribed, which is lovely. And also from the issuer side, it's the smaller raises. We target the 1 to 10 million raise, and as we get bigger, we need to balance our investor levels with our issuer size and gradually keep those kitchen scales balanced. So yes, you're absolutely right. We identified a big gap in the market that is forever widening from the sort of friends and family round all the way up to the grown-up financing, and that gap seems to be getting wider. And it was an opportunity to fill that gap. And a lot of the brokers see it as complementary anyway. So it's not a huge threat. There's a big market out there.
So it's the business that they can't be bothered with so much, or think that they can't be bothered with. Presumably, actually, with the uplift in liquidity since COVID in the small cap space and the small company space, there's actually even more of the stuff they can't be bothered with because they've got bigger fish to fry, let's say, in terms of what they're doing. So that's actually worked in your favor. But in terms, I suppose, you mentioned crowdfunding, which in a way it sort of slightly sends shivers down the spine for some people. Maybe the whole thing here works. I mean, the crux of the matter here is the quality of the companies that you have on your platform. What kind of vetting, what are they, and that will determine really the long-term success of what you're doing.
Yeah, absolutely, Zach. I mean, we vet every single company that comes onto the platform. We get a lot of approaches and are getting numerous approaches every day. And as you know, there's a lot of moose, as the geologists would call it, a lot of moose pasture out there. So we carefully vet the deals. We're only putting about 1 in 12, 1 in 15 that we see up, either on the investor lounge, which is a sort of a waiting room or a holding pattern for people that want to up their profile, allow the investor community to understand what they're up to, because there's a lot of noise out there, whether you're TSX, AIM, or private, and it's getting your deal out there. And then also we have the raising platform where people are actually going ahead and pressing the button. So we've had companies that sat in the lounge, B Metals, for example, which is TSX listed. It's the sort of third generation of Beamer, then B2, with John Wilton. They wanted to up their profile as they were growing, etc. And then other companies go straight into the raising platform, as it were. So we have Altona Energy at the moment that's sort of reborn as a rare earths development company, and they've got 4 rare earth projects around Africa. They spent a little bit of time in the lounge. We worked up their profile. We assessed the deals as they were growing, as the permitting got done, etc. And then at the right time, i.e. end of last week, we pressed the button and said, okay, let's go ahead. And that's a very, very small raise. It's an Aquis listed company, and it's only £500,000. So that's probably the smallest end of the scale. But who's going to hear about that deal if, in the general market?
Well, they can always talk to me. I'm sure that everybody will know about it once they do that. Yeah, so that's the point there. But long term, let's say, if I know about MINEXIA, I like what you're saying and everything else, and I've got 10, 20 grand to put in a situation, the whole thing will work best if you've done the homework, you've done the DD, you've made sure that the management are good and the assets are good, etc., etc. That's really the way it's going to work. That one can almost not say blindly, but one can say, like, what have MINEXIA got on their in tray at the moment? Well, I'll have a bit of that. I'll have a bit of that. I'll have a bit of that. That's really how it's going to work best, isn't it?
Yeah, we're increasing the probability of success. We're not recommending a stock, but we put all the information out there. We do our own due diligence. It's got to pass. The biggest challenge to something like a platform is obviously the KYC and the AML side of things. So we have a strong compliance team behind us as well. And it's absolutely critical that we do our checks and balances. You mentioned management. If we feel certain individuals, and how they've gone about mining deals, or even now fintech in the past, aren't quite sort of rules of engagement, if you like, then we have the ability to veto them as well. So hence the vetting process. But a platform such as this would be quite open to abuse if people wanted to do the sort of money laundering side. So that's what we have to be most careful about.
And I presume that you've got enough quality offerings to not mind getting rid of 80% or 90% of whatever you get. You can make a turn, you can make your money, you can be profitable as MINEXIA, and not sort of think, well, I better take these people on that don't quite like them, but I've got to pay the mortgage next month or whatever it is. I mean, that's the conflict of interest area. Is that part sort of settled, relaxed? What's your position on that?
Yeah, that's why we have it's almost an investment committee. And then we have an advisory board as well. Everyone has their say. And yes, those conflicts of interest, you have to be very careful. I haven't paid myself for 12 months, so I'm not sure about paying the mortgages is really a big issue. But that's startup territory for you. But yeah, everyone has their say. And if there's not really a blackballing ability within the investment committee, but we have to present it. Whoever's presenting doesn't get a vote. Everyone analyzes the deal, comes back with comment, and we really earn our money on a success basis. So if we have a reputation of putting shoddy deals up there, we're not going to be successful in raising money. There's a very small onboarding fee which just covers our cost and our compliance and all the rest of it, and then it's really on a success fee basis. The investor isn't charged, so it's free for the investor to sign up. They have to pass their KYC and their sophisticated investor checks or the high net worth checks, and once they've done that, it's free access, and it's really the issuer that pays through commission.
Right, and then as I mentioned at the beginning, the exciting areas in the market are mining, tech, and pharma. You said that you've got the fintech with High 55. We're going to see more of a diversity there in what you're offering on your platform.
Yeah, that's the future plan. I mean, we were all mining experts when we started this off. well, we still are. And we've brought in fintech people to complement both growing our own platform as we develop our own IT, intellectual property, etc. And as we developed that, we realized there were more and more opportunities in that fintech space, and likewise in green tech. And there's that sort of crossover. I mean, you could put sort of battery metals, etc., in the green tech space as well as in the mining space. So what we also want to be able to do is make available different investment opportunities to people that perhaps are originally interested in fintech, and they go, oh, actually, rare earths, that's quite interesting, or hydrogen, or other elements potentially. And likewise, some of the mining investors are very, very niche, as you know, they may look to other sectors. So that's our growth plan, and we're doing our own raise towards back end of during October, to raise more money to develop those sort of parallel platforms, and our own IT, and a bit more marketing. So that continues as well.
So that was going to be my final question. If you maybe do want to go into those individual situations, but you like the platform, one can write in and have a chat with you.
Yeah, they can invest in the mothership, or they can invest in the individual deals. I don't know where we're going to end up in 2 to 3 years' time. Perhaps a large broker might think, all right, they've got all the infrastructure, they're becoming a little bit a bit competitive, or we're just going to take them out, or we may list ourselves. All those options are open to us.
Richard Lloyd, CEO at MINEXIA, thank you very much indeed.
Thank you, Zach. Have a good day.